Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, June 9th, 5 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important to know for next week, and update the world famous 21 over 21 leaders list. Let's dive right into it. You can see market state just plain old uptrend. No large cap, no tech, no exclude, just uptrend. Because if you look over here at the trend gauge, certainly for the first time since January of 2022, our long-term trend is up. So that's how long it's been since we've had all four green arrows on the trend gauge. That means leadership in an uptrend, acting bullishly, and then all three time frames, all five of the major indexes are bullish across those three time frames: the short-term 21-day moving average, the medium-term 50-day moving average, the long-term 200-day moving average. So hopefully we don't jinx the market by going to all green. But then again, all we're doing is presenting the facts here. We've got rules. I I display what's happening, and all five of the indexes are above those levels, and market leaders are acting fine. So anything else would be an opinion and not a fact. So what happened today? Uh, Gap up in the morning, 0.3% on the S&P, 0.6 on the Nasdaq, led by tech, but uh, only lasted about an hour and a half, and then a failure. This we've been talking about this 4,300 to 4,325 level as a big resistance level on the S&P 500, and we just couldn't hold it. So rejected again at 4,300 on the S&P, and it was really led by a negative reversal lower by the big tech stocks. They still finished positive on the day, but were up significantly higher than where they closed. Leaders, however, acting just fine. In fact, all 21 of last week's 21 have carried over to this week. Two broke during the week, but they recovered by the end of the week, and we'll take a look at the charts. And we're also going to take a look at weekly charts of all of them, so you can see what their final performance was for the week to separate leaders from laggards. Because what we saw was, outside of Tesla, a lot of the big FANG stocks just paused for the week, but that's just fine. That's what we need, as the NASDAQ 100 is extremely extended from its 50-day moving average, and it just frankly caps the upside. Several times this week, it looked like we were going to shoot higher, but by the end of the day, we gave up a bunch of the gains, and it's just a matter of being too extended, too overbought. So here are the final numbers. RG8, this is our 8 growth ETF composite, down 0.35%, S&P up 0.11, NASDAQ 100 up 0.38, Dow up 0.14. Mid caps and small caps continue to consolidate their nice gains from earlier in the week, down 0.58 on mid cap, down 0.8 on the Russell 2000. Global 60/40 just barely positive, up 0.05. GROTECTION in-house led the way on our leaderboard today, up 0.68%, led by Tesla, led by AMD, and led by Uber. Three of our positions performing very well, and everything finishing green in the portfolio today. Love it when that happens. We'll hit the tail of the tape and the 21 over 21 list. Let's get right into it now. We're going to start off with the S&P 500. This is a daily chart of the S&P, but what I'm going to do is take advantage of one of the features of MarketSmith. I'm going to slide this over a little bit, and I'm going to make room for a weekly chart of everything that we go through. You click this receive symbols from main chart, click the time frame that you want, and we're going to slide this over here so you can get a peek at what's happened the last couple of weeks and a peek at how we closed for the week for whatever ticker we're looking at. So this pulls the ticker from the main one. This is one of my favorite features of MarketSmith. I have 5 MarketSmith screens open all day: a daily, a weekly, a 60-minute, a 1-minute, and a 5-minute. And with their stochastic turned on, it gives us ideal targets for entry points and tells us what the trend is across multiple time frames. So here's the S&P 500 on the day. You can see the breakout, attempted breakout above this 4,300 level. You can see back here on the left side, leftover resistance from last August at 43.25. Today's high was 43.23. And then we reversed, closed back below that 4,300 level. There are three key areas uh, within this, three resistance levels within this 25-point range. That's why it's difficult to get through. Looked like we were going to do it today, but again, when you're working in conjunction with tech, the cues and how extended they are above their 50-day moving average and their 21, it's difficult for follow through, and that's what we saw with some profit taking. So on the week, up 0.39% for the S&P. Nasdaq 100, really we got what we needed on the week, and that was a break just barely lower on the week. You can see the candle combination over here after the big move up, going sideways, nothing wrong with that. And the close on the week, 8% above the 50-day moving average, still pretty extended. We got as low as 6.9% at the close on Wednesday, recovered most of those losses, and touched and undercut and reclaimed the ADMA, but just not going to run away being this extended from the 50-day moving average. Let's go to the Dow next. On the week, Dow up 0.34%. And today up 0.13%, coming into this 34,000 area that's been resistance for quite a while. Now the bright spots on the week, mid caps, and we needed this because we needed breadth to expand. Down 0.62 on the week, up 1.4, or sorry, on the day, up 1.43% on the week. And you can see the clean breakout here on the weekly chart above all of the moving averages. Nice little bull flag being formed here, a 2-day bull flag, double inside day versus Wednesday's up day for mid caps. For small caps, down 0.81% on the day. Also starting a bull flag lower volume after the two big volume up days, up 1.65% on the week. Breadth expanding with mid caps and small caps participating. These are all things that contribute to a stronger market. Let's go to the VIX now. VIX continues to be low, made a lower low, closed inside today, down 5.27% on the week, up 1.32% today. The dollar after decent sized drop yesterday, regaining a part of it, up three, down 0.32 on the week. You can see three tight weekly closes, and this is a bad candle, a bad I don't know what happened there. I just don't think that print was real. But so there we are on the daily chart, back closing the week below the 200-day moving average, closing basically right on the 40-week, but above the 21-day moving average on the dollar. So how did the dollar impact precious metals? Dollar up, gold down, as you might expect. Note how gold cannot get above this declining 21-day moving average. And over here on the weekly chart, it's sitting on the 20-week, which is, or the, 20-week, so about the 100-day moving average. Gold still up on the week, 0.55%. Gold stocks, harder hit today, down 1.46%, down over 1% for the week. Again, that declining 21-day moving average acting as resistance. Silver SLV, barely down on the day, rejected at the 50-day moving average, but showing relative strength versus gold, up 2.7% on the week. Let's finalize with Bitcoin here. Bitcoin down 0.7 on the day, down 3% on the week. Now let's flip to bonds. Well, actually, let's do the equal weighted indexes. RSP is the S&P 500, equal weight, down 0.12 on the day, up 1% on the week. Not surprising with mid caps and small caps outperforming, and taking a break with some of the FANG stocks that the equal weight would outperform the market cap weight. Let's go to QQEW. This is equal weighted NASDAQ 100, up 0.2 on the day, up 0.3 on the week, also outperforming the market weighted indexes. Let's flip to bonds now. Start with the broad bond index BND, down 0.2, trending under the 21 and the 200-day moving average, down slightly on the week also. Let's go to TLT, the 30-year price, trending below the 21-day moving average, barely down on the day, barely down on the week. Let's go to yields on the week. First, the 30-year. On the week, up 0.13%, finishing at the low end of the range, however, and riding this 21 On the daily chart, the TNX, the 10-year, up more on the day, up 0.83% and up 1.46%, putting in a decent week on the 10-year yield. So those are all of the inner asset correlation charts that we use. Let's go now to the tail of the tape, and then we'll hit the 21 over 21 list. You can pause this here. I'm going to hit the highlights. Important next week, Tuesday, we've got CPI. Wednesday, we've got FOMC. Right now, there's a 29% chance of a 25 basis point increase, which means there's a 71% chance of no increase. We'll expect some volatility after that decision. 5-day consolidation now on the S&P 500, 10 days above the ADMA, 11 days above the 21 EMA, and our expectations remain positive as long as we're above the 21. However, we did fail again at resistance. That 4,300 to 4,325 level on the S&P stayed in range. This next resistance level for the NASDAQ 100 goes all the way back to last year. There's an unfilled gap. I'll show that on a daily chart next week. Really just 4 directional changes on the day. Not a lot underperforming or outperforming. Dollar up, XLK, that's tech, XLY, consumer discretionary, XLV, healthcare up on the day. Regional banks, retail, oils, and gold and gold miners down on the day. Changes in to the portfolios. We trimmed a third of our Tesla. It got extremely extended today, almost 4 ATR. We took a third of it off as it ran into the 250 level. That's kind of a Livermore-ish level, and that's where it paused today. Got to about 252-ish, I believe. Yeah, 250, 242, backed off, closed at 244 right at the open. We sold a third for around 249. So offensive selling there, and we added to TNA. This is our small cap proxy, 3 times the Russell 2000 as it continues to consolidate its 2 nice days. So basically adding 0.02% to our exposure, which is at 1.79. Bottom line for the day, failure again for the S&P at the 4,300 to 4,325 resistance, but the leaders continue to act well. Good stuff overall, as I said, for the first time since the January of 2022, we're at all 4 arrows, meaning all 3 timeframes and leaders acting well. Let's go to the 21 over 21 now. And like I said, all following over from last week. Now, what we're going to be pointing out here is how the overall daily chart and then how they did on the week. So this will give you some indication about what's pulled back and what's shown strength. Reminder, if we've got a red flag over here, it means we own it in-house, and everything, these first 10 that we're going to show, 9 or 10, are all red flagged. We'll start off with Microsoft. Got a little too far too fast. Here was the big pull down day on Wednesday, which we saw in really all of the AI tech related stocks. And Microsoft hasn't regained much of it. So you can see the relative weakness on the week for the week, and down 2.6% on the week. Just taking a rest. It's very normal reaction after a big run. Meta, sitting on its 8 EMA, down 2.8% on the week. Again, normal action with it being extended. NVIDIA continues in this range. This is 2.5 weeks now. You can see the 3 tight closes, but a big tail up the second week, a tail down on this week, down 1.4% on the week. Just would love for this to blast off through 400 with some volume so we can add to our position. Uber, nice week for Uber, up 3.2% on the week, higher high. One bad day this week on Wednesday, but it recovered nicely the next 2 days to close at highs from this bullish cycle. AMD, nice day today, up 3.2%, up 6% on the week. This is absolutely a leader along with NVIDIA in the AI chip space. Chipotle, this is the one that closed right on the 21-day moving average, almost to the penny. It's been lagging. We cut 3/8 of our position this week, but we're giving it a chance. It's oversold and it's right at an important resistance level, and the risk reward actually right now is skewed to the upside with it holding the 21 and above this 2,000 level, down 1% on the week. DT, we own this. This had kind of a underperforming week, but it does have an AI component, down 3.2% on the week. But look how strong that's run up for 6 straight weeks before taking a break. Tesla, big winner of the week, up 14%, reversed off the highs near this 250 level, closing at 244. But look at these 4 big up weeks, and the volume spikes are there also. It's there on the daily chart as well. Relative strength. Can't really complain anything about what Tesla's doing. Very clear big cap market leader. Google rested this week, down 2%, made a higher high and reversed normal action. It had the Wednesday reversal with all the AI tech stocks, but it did hold the 21. Chat, this is our preferred ETF for um, generative AI, and you can see it's been positive all the 3 weeks since its opening week, and as long as it's riding the ADMA higher, we'll stick with this, up 0.82 on the week. Race, Ferrari, really a tight last 6 days, barely down on the week. DraftKings, down 2.4% today, sitting on the ADMA, basically flat for the week. Intuitive Surgical, a lot of leaders rested this week, but they were somewhat extended and all holding their 21, some very extended from their 21s. Intuitive Surgical, up 0.6 on the day, barely up on the week. Celsius, down 1.3% on the day, down up 0.7 on the week, but you can see the tail as it just went too far too fast in this big run here after pulling back to the 21 day after its earnings gap up. SMCI, the champ on the week, up 18%, just best, actually up stronger than Tesla. We'll be digging quite a bit more into this name. Very viable on this gap up here on its last earnings report. And then on the AI, uh, this was the NVIDIA AI frenzy that was kicked off, and nothing has acted better than SMCI since then. Not even NVIDIA, after its big move up, has continued to move higher the way this has. Just a great acting stock. ELF, nice tight action on the daily, 3 fairly tight closes on the weekly, taking a little bit of a break on the week after a nice gap up on earnings. Live Nation up 1.6 on the week, up 1.1 today. Very nice chart. Palantir got very much too far too fast with a big reversal on Wednesday, still up 3.4% on the week. Toll Brothers, 4 tight closes on the daily, up 4% on the week, continues to defy the odds with the high interest rates. But there's a big shortage of resales on homes, so new constructions is doing all of the selling. Monday.com, closing nice and tight near the pivot, flat on the week. Palo Alto, down 1.2%, up 1.3% on the week, consolidating near the pivot. And I believe that is it. That is the 21 over 21 list. And with that, I'm going to wrap the week. So remember, it's not how much you make in the markets, it's how much of that you can keep. We'd love to hear from you. You can email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. So wrapping up the week ending June 9th, this is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great weekend.